We are 3 hours into trading. It's January 28th. Hello, traders. Let's take a look at the market. Gave us a little bit of a scare yesterday. For those of you that have been long, you know that I've been telling you, watch out for volatility. We've got a lot of warning signs. These drops can come very, very quickly. Yesterday we had the S&P 500 down 100 points intraday. Very, very nasty. Option implied volatility spiked. You can see here that we tested the lower end of the upward sloping channel. So let's draw that lower end in right there, and we're going to connect as many of these lines as we can. The more touches, the more valid. You can see yesterday we touched it and barely bounced off of it. The price action yesterday was not good. We're going to the 5-minute chart, and I'll show you why I feel that way. We had the gap down. Market sold off and then it bounced, but that bounce could not even get back to the opening or the high of the day from that gap. That was a bad sign. Market pulled back. We tested the low yesterday. I believe that when I did yesterday's video, we were starting to rally a little bit. Couldn't even get back to that prior high once prices started to roll over and we had a bearish cross on the 1OP signal. I knew we were in trouble. Take out the low of the day and close near the low. Really, really heavy selling pressure, bullish sentiments off the chart, margin lending at dollar record levels. That means that investors are leveraged to the hilt. Option implied volatility super low. That means no one's hedged. There's a lot of complacency. That's usually when you get your big market drops. So what does the market look like today? Which, by the way, all I use to trade the S&P futures is my 1OP indicator. Took me 10 years to develop. Beautiful bullish cross right in there. You can see how it's predictive. Right there you get a bearish cross. Beautiful short. Get a bullish cross right in here. Right there is where it happened. You can see it lining up. Nice little entry point there. You've got a cross here telling you that danger lies ahead. And then the market sells off. Now here you got a little bit of a bullish cross right in here. The market was able to find support and rally back to that level. This morning, this is what we call a bullish divergence. So you've got a bearish cross right here. Market doesn't go down. Grind, 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 higher. When this indicator is falling, you would expect the market to fall. But when it didn't, that means that the next bullish cross is going to be a good one right in here. And you can see how the market's continuing to float higher. We're also into the gap. That's the gap yesterday. You can see how the market is above that. Buyers will have renewed confidence. They will try and fill in this gap right here. We had a number of things that happened yesterday, mainly earnings announcements. So we had Apple, Facebook, Tesla, all down after the number. Microsoft posted a good number on Tuesday. It was not enough to help keep the market afloat yesterday. We still had that heavy round of selling. I believe that we found our footing for right now. We'll take a look at the daily chart. We need to make sure that that 372 level is preserved. That's the lower band from the upward sloping channel, and you can see the tails bouncing off of that level. So as long as the upward sloping channel is intact, it will continue. The danger is if we get a blow off rally, a buying climax through the upper end of that trading channel. What might possibly cause that? Well, a $1.9 trillion stimulus package would certainly do that. Was this bearish move right here enough to attract enough bearish sentiment? Was it enough to shake out bullish speculators? Probably not. You would need to see sustained selling, something like this, where you drop, get a tiny bounce, and then the next shoe drops. That is what flushes people out. And that type of move, you could certainly get a huge upward explosion. So right now, I think we stay in the trading range. I think that after after Google and Amazon report next week, those are the major tech companies that are still left to report earnings. I think that some of the air gets let out of the balloon. Very volatile conditions right now. We've seen just crazy stuff going on with some of these short squeezes. GME, I showed you a bunch of them yesterday. That's starting to settle down a little bit today, but you can still see them firing all over the place. I want to put up our positions right now because I want to make you aware of a video that's going to be coming out on Saturday. I'm going to release it on YouTube to the public. This is my weekly swing trading video. I did it last night. We were really in a pickle because we have all of these bullish put spreads that are going to expire either tomorrow or a week from tomorrow. So Netflix and Nvidia expire a week from tomorrow, but Lyft, Walmart, and NET were all knocking on the door. That means that they were right at our short strike price for our bullish put spreads, and we couldn't leg out because we only had 2 days left, and that would mean that we would be taking an incredible amount of risk. So we couldn't really do anything with those positions in terms of legging out. Option bid-ask spreads really widen out when you get big 100-point S&P moves lower. So you really didn't know where you could get out of the spread. Certainly didn't want to leg out of the spread. That's the type of situation that I've been warning you about, is if you think you're going to be nimble, you think you're going to be able to exit these positions easily if the market should drop, guess again. Option implied volatilities explode, bid-ask spreads widen, gets very, very difficult to get out of these spreads. So fortunately, we were able to hedge the position. We did it by buying some VXX calls, and that position is currently working out well for us. The stocks are all out of the money with the exception of Netflix, and that's very close to being out of the money. So our bullish put spreads are actually in very decent shape. This strategy has worked out well for us. So let's continue to move on. I'm going to keep this video relatively short. I'm going to put up a search. I believe that the market's going to continue to float higher here. And I'm going to put up that 5-minute chart so you can see it in the background and track the S&P 500. Very gradual, gradual, gradual. Buyers should gain confidence now that we have breached the high from yesterday, and we should try and fill in a little bit more of this gap right here. So I'm going to take a look at a search that I ran this morning just before I started this. And these are the types of situations that we'll be looking for. And yes, some of those short squeezes would come up on a search like this. I'm looking for good option liquidity, a rating of -1 or higher. I want to have heavy volume today, want to have heavy volume yesterday, and I want to have the stock greater than the prior day's high. I also want to have relative strength in the stock on a daily basis, and I want to have heavy volume on a 15-minute basis. We can search for these volume spikes on any time interval that we want, even down to a 5-minute interval. And this is how we were finding a lot of these big volume spikes yesterday. One of the searches for day trading that I love to run is show me a stock that's in a compression on a 5-minute basis and that has a volume spike on a 15-minute basis. When I look at those charts, if the stock has had upward momentum through the course of the day, I know that it's staging for its next leg higher. Custom search is really, really powerful. We also have the ability to run custom alerts using all of these same variables so that you get a pop-up alert when the conditions are made intraday. In any event, I ran this search and these are the stocks that came up. So I'm going to click through them. I'm going to look at them. We're going to find a trade that we might like on the long side. Again, we need to be super careful right now with our longs. RAD, really nice breakout here. This train has left the station. You can see the high up here this morning at about 32.40 and how the stock has pulled back to $28. I wouldn't touch this one. This is another one of those short squeeze plays. Let's go to the top, AAL, another one. Breaking out here, earnings before the open. You can see the B. It's retraced all of that, and now it's below the breakout. So not a good candidate. Abbott, super nice. Big horizontal breakout right here. Look at it gap higher. Still trading near the high of the day. Big volume. Earnings before the open yesterday. Follow through today. All of yesterday's market selling kept a lid on this stock. You could see it wanted to move higher after that earnings announcement, but with the market drifting lower, it finally gave in. But today, when the market had some sound footing, boom, right out of the gate. This stock has been on the search all day. Now it's looking to move higher. I really like Abbott. I think Abbott sets up extremely well. You would have to try and do a bullish put spread somewhere down here around the 15 level would be ideal. I don't know that you'll get a lot of premium for it. I do like the fact that it's been able to hold all the gains today. I think it continues to grind higher. CLDR. Nice compression here, breakout here, trying to get going, has pulled back off the high. Not my favorite, too choppy, back and forth, way too choppy. Here's another one I like, Microsoft. Earnings after the close, gaps up to a new all-time high. You can see right there, it's through horizontal resistance, but then eventually the market selling pressure wins and the stock starts to pull in yesterday. It wants to go, and then all that market selling, eventually Microsoft continues to drop. But with the market finding its footing this morning, boom, gap higher, has not looked back, wants to go higher. I like Microsoft. I think that Microsoft, you can either get long the stock or you can sell an out of the money bullish put spread keying off of this technical resistance level here. Now it is support that comes into play around the the 227.50 level. I think that's where you want to be selling your bullish put spreads, below that or below the $225 level. You may not get a lot of premium for it. Stock would have to come in a little bit. Microsoft doesn't make big moves. It chops back and forth. So I wouldn't chase it. I'd wait for a pullback, and then I'd look to see if I can sell that 325 put spread. NVAX, that's the last one we're going to take a look at. Love this little compression right in here. Love the fact that the stock is trying to move through it. Got a little bit of volume coming into play here. We've got earnings coming up on 310, so we don't need to worry about that too much. What would I do with this? I'm going to draw an upward sloping trend line on this one, and we're going to connect this right here with this right here. I want to keep it moving gradually higher because ultimately I do want to see the stock through that high, and I want to see a couple of long green candles closing on their high on volume. That'll tell me that the stock has the juice that it needs to make a move higher. This is still a dangerous market, folks. I really feel that on a swing basis, you should keep your trades fairly minimal. I would feel much more comfortable getting a big pullback to the 100-day moving average. Then I could really let loose and do some bullish put spreads and perhaps even buy some calls. We want to be watching to see what politicians do with that $1.9 trillion stimulus bill. Chuck Schumer said that if Republicans balk, we're going to go ahead with it anyway. That is an incredible amount of money, that liquidity, and that money has to go somewhere, probably going to go into the market. You see gigantic short squeezes, so there's lots of money sloshing around. Who knows? If we get the stimulus bill, we could see that blow off rally that I've been mentioning recently. But as far as valuations, they're stretched right now. I think the market's going to chop back and forth. This is a time to be super selective. We're trying to dodge a bullet with our bullish put spreads right now. I'm not going to put my head back in that noose. We're going to let the dust settle a little bit. We're going to see if the market can find its footing and if it can move higher. Coronavirus starting to subside, perhaps that the new cases have climaxed. That would be good news. So I think this is a good time to just take a little bit of a pause. Let's get that clarity, and then we can move forward with confidence. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. I'm always going to try and show you some great trades. I'm always going to try and teach you how to trade, so lots of education as well. Thank you. Trade well. Watch for that video release on Saturday. Super educational. If you've ever had trades go against you and you don't know what to do, I think you'll really benefit from that video. Thanks again. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.